Hello and welcome to Sprott Radio. I'm your host, Ed Coyne, Senior Managing Partner at Sprott. I'm happy to have two returning guests join me today, John Ciampaglia of Sprott Asset Management and Per Jander of WMC. Gentlemen, thank you for joining Sprott Radio.
Thanks for having us back.
Thanks, Ed.
Well, guys, you just returned from London where you spent a couple days at the World Nuclear Symposium. So I'm sure there's a lot of stuff to unpack here. So John, why don't we start with you and maybe touch on a couple key points from an investor's interest point of view, as well as from what's going on in the miners. So why don't we start with the investor interest point of view? What's happening there? What'd you learn?
Yeah, well, I just came back. We had 3 full days at the conference, and I should clarify, we weren't physically at the conference, going to the general sessions, but we were meeting with investors, at the hotel itself and outside. A number of banks were there hosting various investor forums and lunches and drinks and whatnot. And we were, I think it's fair to say, booked from morning till night. So what I take away from that is interest in uranium is very high. And the general mood of the conference amongst investors was really great. There was obviously a period of malaise, particularly in April, when the whole sector was in a free fall, along with just about every other asset class. And I think people's conviction and confidence is clearly returned, given the price action, the executive orders, all of the interesting news announcements happening. And obviously the uranium price is behaving a lot better. So I would say generally very positive mood, lots of engagement, lots of people wanted to talk to us. And it was also nice to meet a number of new institutional investors, most of which were generalists that are still doing kind of nuclear, energy supply chain 101. I had this great discussion with a portfolio manager that said, we run a megatrends fund and we have identified nuclear as one of the megatrends. And I thought that is just a perfect way to think about it. And they were diving into the whole supply chain.
What is that telling you? Because we saw, I guess, a couple of years ago, I had the two of you on and we were talking about the early days when it went from 30 to over 100 and then came back down in the mid 70s. And it seemed like it was more smaller boutique or hedge fund type managers coming in. What is this telling you now that you're seeing larger generalists move into the market? What's your anticipation here as that starts to take shape?
Yeah, I can share an interesting story. A couple of years ago, we met with a fund manager in London who was very bullish on uranium. And he said to us, I don't want it to be too big of a position in my portfolio because I don't want anyone to notice it. And I thought that was the perfect summary, that it was still kind of a fringy, kind of questionable, is this legit? Is it safe? All those kinds of things that we've been talking about. And now I'm not going to say it's mainstream, but it's clearly out of the penalty box. It's clearly being looked at through a different lens. And that lens is not just about a supply deficit that we've been talking about for many years. It's now an enabler to, achieve really important objectives, which are related to energy security, national security, grid reliability, decarbonization. So that's a very, very different narrative and I think a much more compelling thesis.
Well, speaking of supply, this is probably a good time to bring Per into the conversation. Per, from a producer standpoint, from a miner standpoint, what are you seeing out there? What are you learning? What's happening in the space as we sit here today?
I don't know if it's by design or not, but a couple of weeks before this symposium, first, the Kazakhs came out with one of their yearly reports and basically said that we are going to stay put at basically minus 20% of their subsoil use levels. So that means that they're as low as they're allowed to go, but they're also saying that we really can't increase our productions over the next couple of years. So most people are expecting them to sit where they are now, whether that is by design, but they really don't want to get the pounds out of the ground because they want the mines to last longer and preserve jobs and whatever other excuses or reasons we have heard, or that they simply cannot get, whether it's the acid or workers or some other actual production issues. We don't really know, but at this point, I don't really think it really matters because the end result is the same. And it's clearly not that the Kazakhs are walking around and seem uncomfortable with it. On the contrary, they seem very comfortable and confident in just saying, hey, this is part of our plan and we're simply not going to increase production. And then a few days before the symposium, then Cameco came out and said that their largest mine, McArthur River, has a setback production this year because they're transitioning from one zone to another. They basically adjusted their yearly production down with 3 to 4 million pounds this year. And this is an 18 million pound mine. So I would say it's a quite significant reduction. Not all of that is Cameco's share. Part of it is their JV partner, Orano. But they're obviously also having issues in Niger where those assets aren't online and they're looking to replace that somehow. So overall, with these 1-2 punch right before the symposium, it clearly set the tone that if these suppliers are viewed as the biggest and the best ones in the world, if they're having issues, you can be sure that pretty much everybody had issues.
And we haven't even unwrapped the idea of a new discovery or a new mine coming online if the existing ones are dealing with this. So I got to believe the supply-demand dynamics are just continuing to grow.
Oh, they clearly are, yeah. And then if you go on the other side, when you look on the demand side, it's just increasing every year. The utilities are starting to get more active. They obviously have been a bit on the sidelines because of all the potential sanctions, or they're going to be trade restrictions, and there's been so much uncertainty that a lot of them simply hasn't been able to get into the market. And they've also been busy with the enrichment and the conversion contracting. But as that's starting to clear out now, then more and more are shifting towards uranium. So we saw 3 US utilities active in July, and that's a month when normally nothing happens. And if you add up what they contracted, the combined contracted volume, it actually superseded the total amount of the tender that they came out for by quite a bit. And that tells us that they accepted more than one offer. And these are utilities that are quite savvy, and they're more or less leading the pack when it comes to be trendsetters. So that if that's anything to go by, I think we can expect quite a bit more activity to come here in the next 6 months. And then overarching everything as well in the background is that the Koreans, who have a process where they are fairly public in what they do come out and procure, they're out for 8.8 million pounds over a 10-year period, which is quite substantial. And they're asking for terms, because they're probably pretty public in their terms, and they're asking for terms that I simply don't think any supplier is going to be able to match, because it's just too far below the current sentiment in the market. So it's a fair bit of activity going on the demand side, and it'll be exciting to see what happens over the next few months there.
Well, speaking of demand in terms, I use this as sort of a benchmark. A couple of years ago, when we talked, when uranium was slowing a little bit, maybe 15 months ago, price was sitting around 70, and I think if I remember correctly, the term price was coming in around 125, 130. Where are we right now as relates to spot and term? What kind of conversations are happening? Are the Koreans trying to come below 130? Just give us a sense of that, because it's just kind of fun to compare and contrast what's happened in the last year and a half.
Yeah, sure. I mean, the Koreans are asking for 101 and fixed and a non-escalated ceiling. And Cameco said a couple of months ago that they're looking for 140 escalated. So that's escalated by 5% a year. So obviously a huge difference. And then when it comes to term, it's very opaque, because I simply think that there aren't any price points. You can see the price reporters are writing up some things that, yeah, we're probably looking at an $82 level, but it's really hard to tell because it depends on all the other terms you have in the contract. So the term price itself, there's a fair bit of uncertainty around it, and you try to do their best. It's almost impossible to come up with a fair number, because you also say, like, I'm sure a company like Cameco can get something quite a bit higher than $80 a pound. And the ones that might be able to meet those kind of terms, the 80 or something around there, they don't even have a mine operating. So that they have a lot more uncertainty tied to their assets than another existing producer has. So it's a very, very opaque, I would say even more opaque than normal situation in the term market right now.
And that's where we're sitting right now as it relates to spot in early September here, when we're recording, around $80.
Slightly below. It's about 77, I would say, 76, 77 today.
Great. That's helpful. John, let's go back to you for a minute, because, as we talk about supply and demand and what's going on in this space, what does that mean for the miners, the equities themselves? What does that mean? What's happening on that side of the table?
Yeah, I might just go back a little bit and build on what Per mentioned about the WNA supply demand forecast, which comes out every 2 years and was released oddly on the Friday, which was the last day of the conference as opposed to the first day. And I think it's important to dive into this a little bit more, because there's a lot of nuances we learned talking to different parties with respect to how it is formulated. And one of the takeaways that we heard from some people is that this year's forecast, which comes out every 2 years, as I mentioned, was controversial amongst the working group members. And those are members that work on the finance side, the producer side, the utility side. And that kind of piqued my interest because why is it controversial? I mean, this is something you can obviously model on the demand side in terms of existing and planned and under construction plants. You can model the mines because, quite frankly, there aren't that many of them in the world. And what we learned as we dived into the construct is, first of all, the supply side was somewhat, I think, impacted by some nuances. One, the cutoff on the supply side was in June. And since June, we've had at least 4 of the uranium producers announce missed production targets. So that's not baked into the supply number. The second thing that was kind of interesting is the working group modeled in an assumption that all the pounds held by financial players, including the Uranium Trust, which is about 100 million pounds in aggregate, at some point comes back into the market. Well, that's kind of an interesting assumption given that's not the mandate of these vehicles. And then the third thing I would say is that the supply is also based on every available project in the works, whether it's viable or not at current prices. They're all baked into the supply. So net, I think it's fair to say that the supply is probably inflated relative to what will likely play out in the marketplace. And then on the demand side, obviously, what we have seen in the last 2 years is a lot more small modular reactor development, a lot more restarts, a lot of life extensions. All of that is only pushing the demand curves up, whether you're looking at the reference, which is the base case, or the high or low scenarios. And, nothing's really changed from 2 years ago or the 2 years before that. We remain in a structural supply deficit. That's not changing. I think the most meaningful thing that has changed, as Per said, that 2 of the biggest and best producers in the world are having challenges really ramping up production. And that, I think, is probably more important to note because uranium mining is challenging. It is obviously an industry that was dealing with a lot of atrophy because it was basically closed in for many years when prices were not economic. And it is obviously trying very hard to flex production up, and it will come, but there's growing pains top to bottom across the landscape of companies.
Are you seeing then, just sticking with the investment point of view for just a moment, if the existing mines are having an issue with ramping up production, are you seeing anything in the news flow or from this conference where exploration is starting to percolate back up? Are you seeing more companies talk about that? Like, let's go find new deposits. Let's look for opportunities out there, or is that too soon?
I think there's a lot of activity happening. I think the most exciting development is that development companies, so these are companies that are moving their projects forward to production, are starting to sign offtake agreements. So these are contracts for future delivery of future production. And that is an important, I think, piece of the puzzle because with those offtakes brings other forms of capital financing to really get those projects from concept to construction to production. And so we were at the conference and one company, during the conference announced an offtake. You're starting to see more and more of these companies where utilities are willing to go to these earlier stage companies and signed long-term offtake agreements to help them come to market. NextGen is obviously another company that's been in the news in terms of signing offtake. So it's important because these are capital intensive projects, and obviously there's a demand signal there coming from the utilities.
Going back to utilities then, Per, what are you seeing from a kind of a utility basis or even a regional basis? Are there any sort of hotspots out there? I was reading recently that here in the United States, I think it's Illinois, South Carolina, and North Carolina are 3 of the largest states that are currently producing and consuming, nuclear power, nuclear electricity. What are you seeing out there? Are you seeing utilities raising their hands saying, hey, we need to start getting more of this, or we need to expand? John mentioned the SMRs and the restarts and the life extensions. From your seat, how real is that? Are you having conversations with some of these utilities? Give us sort of a snapshot of what's happening in that part of the ecosystem.
Yeah, there is a lot happening, I would say, and it's pretty much all over the globe. Obviously, the Chinese are by far leading the pack. If you look at the reactors that are being built today, it's about 60 of them now. Half of those are in China, so they're marching ahead as they always have, and there's no reason to believe that they'll stop anytime soon. Now they got it down to a science. It's less than 5 years for them to build a reactor, and if you believe the numbers, they say they're also quite affordable compared to other parts of the world. So they're obviously getting very good at this. But I would say across the board, there's utility activity everywhere. And if you go back to the report that John mentioned, this nuclear fuel report that comes out every 2 years, just like there's a cutoff on the supply side, there's also, I would say, utilities maybe we normally wait until the final investment decision before they get into the model. But then I met with a row of different utilities, and I would say every single one of them had some kind of nuclear new build project going, and none of those projects were in the demand model. So, and they're aiming at them to be up and running by 3035, and that means that the fuel demand is going to hit 5-something years from now from these reactors. But the decision hasn't been taken yet. But they're also not just planning this for fun. They definitely will go ahead and build this. And I think one of the interesting things, if you look at this report as well, just like the supply side tends to be a little overstated, if you will, because there aren't any cost levels in there. On the demand side, it's almost a lower level than you would expect. And the reason for that is these people come and sit together, and basically companies from all over the world come and sit together, and it's almost a negotiation where
Right.
the supply side obviously doesn't want to say, oh, we're not going to produce that much, the price is going to be high. And the demand side is doing exactly the same thing. We're not going to build that much, or we're not going to consume that much, so the price is going to be pretty low. And it almost became, I wouldn't say farcical. A few years ago, it almost became farcical, and Cameco basically decided to, like, we're not even going to be part of this process because it's not useful anymore. They have since come back to the table, and I think it's a much more constructive dialogue going on now, because I was at Cameco at the time, and I think it was absolutely the right decision because it was simply just not very productive at all. But now it's come to a better level. The most interesting number, at least I look at, is for each report, how much has the demand side increased? And if you look at it compared to last report, the reference case is up almost 10%. The low case is up by 12% compared to just 2 years ago, and this is by 2040. But if you look at the low case itself, it is more than 50% higher than consumption today. So even in their lowest case, we're increasing our consumption levels by 50%. So that, if anything, to me, is extremely bullish as compared to where we've been in the previous years.
Is there any risk, or I guess maybe a better way to ask it is, what is the risk on the supply demand side of things, where if there's too much demand and supply can't meet it, will companies, like we talk about AI and data centers all the time, wanting to move towards nuclear? Is there a risk of them saying, you know what, this just isn't doable, the supply demand is not going to be able to keep up with our growth, let's look elsewhere? Or is it going to fuel more innovation and try to catch up to meet that? What's your sense on that? And that might be a good comment for both of you to sort of lead with, is that it seems to me that, I don't know, I read that it's less than 10%, closer to 5%. The cost of running a reactor is, the fuel itself. So maybe even if it doubles, it doesn't really change the profitability of that. Is that A, true? And then B, I guess the second part of that would be, is there a risk of supply demand not ever meeting and people decide to start looking elsewhere to create electricity?
I mean, I can start here. It's like, I would say the 5 to 10% number that you have is probably the uranium itself. I think if you add on conversion, enrichment, and fuel fabrication, you might get to 10-15%.
Okay.
But even so, it's not very much, right? If you have energy prices go up, like as they have been, and if you look at UK where we were, they've gone up by quite a bit. I mean, you can absorb a rather large increase in uranium prices and still be doing just fine when it comes to the economics of your power plant. So I am not concerned at all. And John, I can pass it over to you when it comes to the scarcity of uranium and what would it take to get that stuff out of the ground?
We're often asked by investors, what's the bear case? And the obvious one is, a large-scale industrial accident. But the only other bear case we've ever heard put forward, and this is by a very well-respected longtime industry participant, was there's not enough fuel to basically underpin these ambitious build-out programs. Now, if you think about that statement, who's leading the most ambitious build-out program in the world? Well, it's China, as Per just mentioned. But China has been aggressively stockpiling and have been the most aggressive amongst different groups in buying uranium in the last few years, while other, utilities have been somewhat on the sidelines. So if most of the growth is coming from China, we know from industry reports that they're sitting on significant stockpiles. And we heard that Microsoft is now an official member of the WNA, which I think got people's eyebrows up. What if these hyperscalers are all in on nuclear in terms of baseload power that we talk about so often, Ed? What if they really create a whole new demand source given their deep, deep pockets? And as we know in all commodity markets, prices adjust to create commodity responses. And I was reflecting the other day on, well, what kind of commodity response have we had since we started this journey in uranium 4 years ago? And, the price was under $30 a pound. And we were producing, I don't know, about 120 or 125 million pounds of uranium that year. And now the price is $77 and we're producing maybe 150 million. For the price of uranium to more than double, and we've been able to increase production by 25 million, which was mostly the restart of one mine, doesn't feel like a very powerful supply response to me.
Mm-hmm.
And that's just because uranium mining is challenging, and a lot of these assets and projects have been stuck in the ground for a long time or stuck in 3 or 4 year permitting processes. So more pounds are coming, but it always takes longer in uranium to have that supply response, unlike other commodities where you just start pulling more oil or gas out of the ground when prices are attractive. So I think that's kind of the wild card, is these hyperscalers are really the ones that are driving the marginal increase in electricity demand. They are willing to sign these very long dated power purchases agreements with utilities at levels that are way above the wholesale rate today. And that is really putting a lot of pressure on the whole system. So growing energy demand, no doubt about it. New players coming into the market and have the ability to disrupt the oligopolies that the utilities basically operate within. So there could be some very interesting things that play out over the next few years.
And then what would you say about the miners themselves? How should someone think about participating in the equities as this continues to evolve and become, as you said, it's not mainstream yet, but it does seem like it's moving in that direction. As that happens, how should people be thinking about the underlying mining stocks?
Yeah, I mean, the mining stocks have done really well this year. They were obviously incredibly oversold in April. They have experienced a very sharp V-shaped recovery, and they're doing very well relative to the price of physical uranium this year. So it's been a year where the uranium price has kind of meandered around a bit. The equities sold off, but then have recovered and then some. But we haven't really seen a lot of new capital coming into the uranium mining equities, even though they're performing much better than the last few months. I suspect that we will start to see a reversal there, as just general interest in uranium is coming back in the market. I used the term earlier about inflection points. Again, these are very kind of gut driven, but it does feel like we're at another inflection point here in terms of sentiment, price action, interest. So we're feeling quite constructive going into year end.
Great, thank you. And Per, any kind of last parting thoughts you'd like to leave us with as it relates to the supplier demand side or the production side?
I don't know if it necessarily has an immediate impact, but just what John mentioned, that you have a company like Microsoft be part of this World Nuclear Association. And if someone would have told me that a couple of years ago, I would have thought they were joking. But but you actually have these enormous companies come in and start looking around at our little quirky field here. It's not in any supply and demand models just yet, but things can change very quickly. So it's a very, very interesting space, and it's clearly not just Microsoft. Google is right behind them, and you have Meta, and you have everybody else too. So there's a lot of capital out there, and they're not going to slow down because they can't find the electricity they want. They'll just make sure it happens one way or another. So it adds a very exciting element, I think, to this space.
Yeah, I would agree with that. And John, anything to leave us with as well, maybe more on the investor point of view?
Yeah, just as I mentioned, I think we went through a very challenging period into the spring, and it was not driven by fundamentals. It was driven by a lot of noise, uncertainty, and shifting, trade policies. The one thing that I think is very positive to reiterate is that uranium is not subject to any tariffs whatsoever. And I think that demonstrates the strategic importance of uranium to the United States, given how important nuclear energy is part of the overall mix, and that the 4 executive orders that Trump has signed are very, very supportive and bullish for this nuclear renaissance, which is being talked about, but it feels as though we're getting into more of the action phase. I think the groundwork has been set. Companies and utilities have clear direction now around what's in place and what's changed. We obviously still have some unknowns with respect to Russia and its role in the nuclear fuel supply chain, but I think the trend is clearly to reshore as much of that supply chain as possible. And uranium mining is also getting a boost in the United States. There have been a number of projects that have been eligible for this fast tracking process. In Canada, one of the very highly coveted uranium deposits has also been identified by the federal government in terms of expedited approvals and support. So governments are finally starting to not just talk in high level terms, but they're actually starting to identify specific projects and objectives that they want to focus their energy on. So I think that's very positive. So this industry can be a little bit lumpy in terms of news flow. As Per said, it's a bit opaque at times, so everyone's scrambling, looking for signals, but it feels as though the signals going forward are going to be a lot more constructive.
That's very helpful. And I always try to remind people, if you think about spaces like this, you got to think in multiple market cycles. This is not a daily trade or a 1 quarter or 1 year type opportunity. This is a multi-market cycle opportunity, which requires patience. Well, thanks again for your time and your insight, and we appreciate you sharing your information with all of us.
Thanks for having us.
Thanks a lot, Ed.
And thank you once again. My name's Ed Coyne, and you're listening to Sprott Radio.
This podcast is provided for information purposes only from sources believed to be reliable. However, Sprott does not warrant its completeness or accuracy. Any opinions and estimates constitute our judgment as of the date of this material and are subject to change without notice. Past performance is not indicative of future results. This communication is not intended as an offer or solicitation for the purchase or sale of any financial instrument. Any opinions and recommendations herein do not take into account individual client circumstances, objectives, or needs, and are not intended as recommendations of particular securities, financial instruments, or strategies. You must make your own independent decisions regarding any securities, financial instruments, or strategies mentioned or related to the information herein. This communication may not be redistributed or retransmitted in whole or in part or in any form or manner without the express written consent of Sprott. Any unauthorized use or disclosure is prohibited. Receipt and review of this information constitutes your agreement not to redistribute or retransmit the contents and information contained in this communication without first obtaining express permission from an authorized officer of Sprott.